Frank's not here. We're Frankless. But this is still the IssuesWatch podcast. Hello and welcome to the IssuesWatch podcast. I'm Brad Muniz, your host of the bi-weekly accounting and auditing episodes. I'm an assurance principal at Clifton Larson Allen. Quick disclaimer, the views and statements expressed herein are my own and not necessarily those of NJCPA or CLA. Okay, so I have some different type of content today, not as much details as to pronouncements and stuff like that, but we'll start off with two AICPA items and a PCAOB item. PCAOB items, so if you don't do public company work, don't tune out for the PCAOB one because it's really interesting content as to some statistics that you're going to want to hear and how it may affect you even if you're not in the public company realm. So first in the AICPA, the Employee Benefit Audit Quality Center. So that's one of their areas that one of their quality centers. You have the employee benefits, you have the overarching audit quality, Center for Audit Quality, that you have to subscribe to, and they've got really good information. And a recent release that they just came out with discusses non-disclosure agreements, NDAs. They say it also includes confidentiality agreements, business associate agreements, data protection agreements, and other types of agreements. So why am I bringing this up? Of course, the Audit Quality Center brought it up and mentioned that there obviously has to be a reason that that they wanted you to know something about it. And one of the things that they wanted you to, or some things they wanted you to know is, be careful just signing these things. At the end, I'll give you a story of something that happened to us when we were at Sobel & Company when we just signed an NDA and the trouble it got us into. But you have to be very careful signing these things. And the Audit Quality Center had a lot of really good information in there. It identified 9 risks that you have to watch out for if you just randomly sign these things. I'm going to read off what those 9 risks were. It could require the auditor to maintain the confidentiality of all information obtained through a portal that they may have made available to you. And the problem is that might not be something that you can do because you don't have the access to it, and it could run you afoul of professional standards. Let's go through the other ones. It could prohibit the auditor from using any information obtained through this portal or require the auditor to agree to download and print materials for personal non-commercial use only. Prohibit the auditor from copying, distributing, altering, or reproducing any information obtained through the portal. Okay, so you go when you're doing an employee benefit plan audit, or other audits too, but you go, especially these employee benefit plan audits, you go and you pull this data down from these certain sources. A lot of times it's the TPAs. You go pull down this data, you have to take that data and you have to manipulate it in some way to do some of your audit procedures. This is when they're saying that they don't want you altering the data and all. I can understand they want the content and how they left it, but it won't make it useful sometimes for our auditing procedures. Require the auditor to destroy all data obtained through the portal by a date that is earlier than required for audit documentation retention period. Kind of ties into one of the examples I'm going to give you a little bit later on. Require the auditor to notify the service organization directly of errors, inaccuracies, and incompleteness or other discrepancies in information obtained from the portal. Okay. Require the auditor to agree to access the information only for purposes specified in the license grant. Okay, so if you didn't read that license grant and it doesn't tie into what your audit procedures are, you could have a conflict. Require the auditor to indemnify and hold harmless the service organization from all claims or future or any nature arising from access to the information. Require auditor to agree to allow service organization to monitor the auditor's access and use of the portal without notification to the auditor. One more. Indicate the terms and conditions of the NDA or other agreement may be changed at any time by sole discretion by the service organization without notice to the users. Okay, so I just mentioned a bunch of things and you're like, I don't know what the heck that means. So you really should take these NDAs and read through them, because if you go through them sometimes you'll find that there are certain instances or certain requirements in there that could be in conflict with either your professional standards or even your organization rules and requirements. So here's an example of what we had. Somebody in our office just signed an NDA, and we called up the company and something had happened, and the company said, okay, we want you, it was a company, it wasn't a service provider, it was a company. They said, okay, well, just send us back all the information. We said, well, it was electronic. I don't know how you want us to send it back to you, but we'll be happy to just email it back to you. And destroy all the information you had. Now, we had already issued a report. And they said, destroy all the information that you have. And we said, we can't destroy the information we have. We have requirements that we have to keep work papers to support our report. And they said, well, no, you signed an NDA that said when we discontinue the agreement, so we issued the report and we ceased our relationship with them, they said you signed in the NDA that if this relationship ever discontinued, you will return and or destroy all data that we've provided to you. Well, we couldn't destroy the data because we have requirements that we support our report, as I said before. And then the other thing they said is, well, you can't have any data in your file that identifies, this was related to employees, employee information. Now, you should never have social security numbers in any of your work papers. No personal identifiable information should be in your work papers. You can have a name, you can have an employee number. So we had to agree to that to make certain changes that we wouldn't identify the employees. We would do employee number 1, number 2, number 3, which made it really difficult. But we still had a big problem coming to an agreement on what we were going to be able to keep in our papers. Had somebody read that agreement properly beforehand, which we do now if we ever sign them, is we strike that and we say that we will return all information, return or destroy all information upon discontinued relationship, except information required to be retained by professional or legal standards. So we make sure that that's in there. So through that, the whole 9 lists of really good items, that's one thing I want you to get out of that. Okay, quality management standards. I'm going to give you a brief piece on this. Are you ready for quality management standards, or are you getting ready? I talk to a lot of practitioners and they're not ready yet. They're not even getting ready. And the AICPA put out an alert just through an email that said the peer review board will be meeting to specifically address the expectations of peer reviewers and administering entities once the standards are in effect. Now, they're not in effect till 2026. As soon as I said that, I shouldn't even said that. Don, I shouldn't have said that because I knew they're going to be like, 2026, I don't care. I don't have to worry about it yet. This is going to take a long time to get ready. So I was talking to somebody in my office, he's been working on it for over a year now, and he still feels he's kind of behind with it. So we're going to actually have in a session down the road, it was coming up soon, Ava Goldman from the AICPA is going to be here talking about the standards and answering some questions, and then there's going to be some seminars relating to it. But what it said is the peer review board is going to meet, and it says that they expect that if firms are not complying with the standard, that they will not get a pass rating on their peer review. That's the big thing that I wanted you to get out of that. If that doesn't wake you up, because I know as soon as I said 2026, you just zoned out and you said, gosh, I hope he doesn't ask a question on it as part of the CPE. The non-pass rating should hopefully wake you up on that. Okay, the last thing, PCAOB. Annually, the PCAOB puts out a report on interim inspections relating to audits of broker-dealers. Now, you may not do PCAOB work, you may not do broker-dealers. If you don't do broker-dealers, if you do broker-dealers, you do PCAOB work. Either you know what I'm saying. And you say, okay, again, 2026, shut it off. But listen to some of these statistics that they had. They inspected 60 firms, and their inspection is very risk-based. Guess what one of the risk-based approaches is? How many audits the firms do of broker-dealers we're talking about right now. Interestingly, there are 79 firms that audit one broker-dealer. Now, I audited broker-dealers in the past. Unfortunately, our firm said we're not going to be doing them anymore, and I said, thank goodness, all right? I can't imagine doing one and keeping up on the standards. I will tell you that as soon as they see that, they deem that a risk situation, and they put that into their sample. Definitely. You know, the AICPA is referred to people like that. They call them dabblers. 79 firms do one. 153 firms do 2 to 20 of them, and I have a few more statistics here. 33 firms do 21 to 50. 10 firms do 50 to 100, and I'll expect you to know all these numbers. If you want these numbers, email me, and I'll be happy to get it to you. I can get you the report. It's public information. And the interesting one, though, is 5 firms do over 100. Only 5. I know we could pick a couple of them who we know they are, but only 5 firms are that do over 100. It's still that 79 that's doing one. That's the one that concerned me. Great report, and there's actually a supplemental report. The significant deficiencies in substantive audit evidence areas, revenue 48% deficiency rate, and the percents I'm going to give you are a deficiency rate. Evaluating audit results 17%, related parties 28%, receivables 36%, and going concern 33%. Those are deficiency rates, and I picked the ones that were pretty much over 10. And lastly, significant deficiency in substantive non-evidence areas, independent, still 13% deficiency rate. Now, fortunately, if you could say fortunately, these areas here were all below 20%. Isn't that scary when I'm saying below 20% is a good deficiency rate? And I'm not saying good, because if PCAOB heard that, they're like, yeah, that's a bad message to send. And the last one I'll say is report on supplementary information, 13%, and then documentation, 16%. 16% documentation deficiency rate, that's not good, because we've been saying it for I don't know how long. Frank, what do we always say? Oh, we always say if it's not documented, it's not done. So keep that in mind and think about that deficiency rate. Okay, in closing, here are some upcoming in-person accounting and auditing events. On September 17th, the Passaic chapter is holding a program in Patterson that will cover compilation, review, and preparation services, as well as a nonprofit update. On September 19th, the Bergen chapter is holding an accounting and auditing update in Paramus. And on September 20th, the Essex and Morris Sussex chapters are holding an accounting auditing update in Roseland. Get more information on these events at njcpa.org/events, and of course, join the Society's Accounting and Auditing Standards Interest Group. Sign up for free at njcpa.org/groups. Thank you for watching or listening, and not having Frank, because now I got room for my arms.